You're most welcome to today's lecture. This is, I think, this is around episode 17. Yeah, you're most welcome to today's lecture. So today we are still going to be talking about time cycles. I'm going to dig deep a little bit into tariffs. Yep. So that's what I'm going to start with. I'm going to start by talking about tariffs. But meanwhile, we can see that here we had our New York session AM. Here we had PM session. So we all know that we split New York session into two. We split New York session into two, AM and PM session. Split it into two. Then this is London session. The whole of this is just London. This is just London session. So yeah, this is London session. And then this one here is what we call Asia session. Yeah, so this is it here. So now this is what we are talking about. I hope everybody's seeing this. So Asia session, what happens in Asia? Price manipulates in this specific, on this specific pair and on this specific price action. Because if you look at this high, this was New York's high yesterday. That was the highest point of New York session. So when they take out the highest point or the lowest point of New York session, this is going to be considered as what? Manipulation, right? Manipulation of price. But if price doesn't take out the previous session's low or high, it's going to be considered what? Accumulation. So in this case, Asia has manipulated above New York's high, previous days New York's high. So to begin with, as I've told you guys, I'm going to start by talking about tariffs. So I don't know that you guys know something about tariffs, but the basis on that point, tariffs, is that, okay, what is a tariff? So you have to understand that a tariff is basically a tax. It's a duty. It is money that is imposed by a national government stroke customs territory on imports of goods from another country. I hope everybody has understood that. A tariff is a duty. I need you guys to take notes. Literally. I need you guys to take notes. So you have to understand that a tariff is just a duty. A tariff is a duty imposed by a national government or a customs territory on goods imported in that country by another country. So it's just like tax that is going to get paid by. It's tax that is going to get paid by what? By another country that is trying to import in goods in that specific country. So that's what a tariff is. I hope everybody has understood that. Besides being a source of revenue, a tariff, you have to understand that the import duties that are imposed on those countries, those import duties can also be a form of regulation of foreign trade and policy that burdens foreign products. And this can do two things. It can encourage and safeguard domestic industry. These tariffs can help to safeguard the domestic industry of that nation or that country. And the other thing is protectionism. Still, they'll protect their economy, they'll protect their jobs, they'll protect their industries. And this all is simply because of the tariff. Now, before we dig deep into the tariff and all these theories, you need to understand the backbone of of how it all starts about. Why should a country have tariffs? Like, don't you ask yourself these questions? So you figure out that there are two things that you have to understand here. You have to literally understand that There's something we call a trade deficit, and there's something we call a trade surplus. Those are two things. We have a trade deficit and a trade surplus. So now what's a trade deficit? A trade deficit literally means that a country is buying more from other countries than it's selling to them. Note, a trade deficit means that a country is buying more from another country than it is selling to them. So literally, there's a lot of goods that are being bought by this specific country than they are selling to the other country. This brings about an imbalance, an inefficiency called the trade deficit. So let me give you an example. The example is here. If a country imports goods worth of 100 million US dollars into their country, yes? If a country imports in goods worth of $100 million into their country, that means they've bought these goods and they're entering into their country. But they've bought these goods from where? From another country. And the exports to that specific country that they bought these goods from is $80 million. That means that there is a deficit of $20 million. I hope everybody's getting this. Yes? Now let me give you an example of two countries. We have in China and we have in USA, right? So USA is going to do what? To import in goods worth of $100 million into their country. But then they are going to export goods to China worth of 80 million US dollars. Now that means China is the one benefiting in this business, in this kind of business. How is it benefiting? Simply because they have a trade deficit of 20 million US dollars that they are literally ahead of USA. So in this case, China is being offered a lot of business than they're offering to the US. So that means there's just that inefficiency. There's that imbalance. I hope everybody's understanding this, yes? Thumbs up if you're understanding this. You just have to understand this plainly. A country imports in $100 million worth of goods and exports $80 million worth of goods to the other country that they've bought from the goods. This leaves that country a trade deficit of $20 million to balance up the $100 million worth of the imports that they've bought from the other country. So now what causes this? It is simply because of two factors. One is a strong domestic economy that leads to increased demand for inputs. A strong domestic economy that leads to increased demand for inputs. A strong domestic economy that leads to increased demand for inputs. I hope everybody's understanding this. When you have a strong domestic economy that leads to increased demand for inputs, what does that mean? That means that your country needs specific raw materials, they need specific goods, they need specific services in order for their economy to remain strong. Is everybody getting this? And then a weak exchange rate that makes imports cheaper, or a lack of competitiveness in the global markets. That's another point. A weak exchange rate that makes imports cheaper, or a lack of competitiveness in the global markets. This also can cause a trade deficit. Your country's inability to compete on global market standards will lead to a trade deficit. Your country's inability to compete on global standards will lead to a trade deficit. I repeat it. Your country's inability to compete on global standards, global markets, shall lead to trade deficits. So that's about the trade deficit. Basically, a trade deficit is when a country is buying more from other countries than it's selling to them. So they're offering more business to the other country than the other country is offering business to them. Remember, in business, it has to be fair value. You have to offer fair value. If I buy from you something, you sell me something. That's why in life you always have to sell something. Why? Because you're constantly buying things. If today you buy food, tomorrow you buy clothes, tomorrow you buy a car, tomorrow you buy gas, you're always buying something. So how comes you're always buying something and you're not selling something? There's an imbalance there. There's an inefficiency. It's just the same thing. What we are trying to talk about is referrals. Let me use it in terms of referrals. Like if I told you're a banker and I'm a car dealer, right? And we decide that, you know what, whenever you have clients that want cars, send them to me. Yes? Whenever you want clients that want cars, send them to me. Then I also tell you that whenever I get clients that want banking affairs, I'll send them to you. So that now we shall get what? Referrals, right? So now, if at all the banker sends, remember you're the banker, me I'm the card dealer. So if you send me 10 people in the first month as referrals to my business, and in that month I send you one, in the second month you send me more 10 and I send you more one, in the third month you send me more 10 and I send you maybe 2, in the fourth month you send me more 10 and I send you 1. That means you've given me 40 clients and I've given you 4 clients. It doesn't make sense. That is the war that is going on, the tariffs war. It is just that inability, that inefficiency, that imbalance in between business, in between trade. There isn't enough business offered on the other side. Now, which causes what? A trade deficit. And when a trade deficit is caused, what happens? That specific country imposes what? Tariffs. And what is a tariff? A tariff is a duty imposed by a national government or customs territory on imports of goods that are coming into that country. Why do they do that? The reason they do that is to do what? To regulate the imports that are coming to that country, to fill in that imbalance between the what? The trade deficit. That imbalance whereby they're offering you business and you're not offering business on the other hand. That is what we call a trade deficit. Now, the only way this trade deficit is going to be balanced is by offering what? By imposing tariffs. I'll say the tariff is a duty imposed by a national government or a customs territory on imports of goods that are coming from another country. And besides this being a source of revenue, import duties can also be what? They can literally be a form of regulation of foreign trade. So now, if these import duties are going to be regulation of foreign trade, what is going to happen? They are going to balance that trade deficit between these two countries. Between this guy that has offered 40 clients and this guy that has offered 4 clients. There's an imbalance there. Like, I can't give you 40 clients and you've given me 4 clients. There's an imbalance in between. And this imbalance has to be what? Filled in. And how do we fill it in? The only way we can fill it in logically is by doing what? Imposing tariffs on you that is having more clients. Because I've been giving you more clients and you're not giving me clients. So whichever client you're having, whichever goods they are, maybe whichever services, whichever products, whichever goods they are buying, they are purchasing, everything, you will be specifically earning from that. And that is how you offer fair value, or that's how they offer fair value there in that business deal. So now that's the trade deficit. And I've told you the causes. One of the causes is what? arise from what? Various factors, which are what? Strong domestic economy that leads to what? Increased demand for imports, right? So these imports can be what? Raw materials, simply because that economy is strong. Their domestic economy is strong. Now, this is what's happening in the USA, literally. This is what's happening. This is what's happening. So let's go to the next, which is a trade surplus. So what's a trade surplus? So basically, a trade surplus is when a country exports more goods and services than it can import. A trade surplus is when a country exports more goods than services than it imports rather. So you have to understand that in this discussion today there are major words there. The major words here are tariffs, trade deficits, trade surplus, and what? Imports and exports. So what are imports? Imports are goods that are coming into a country. Exports are goods that are going outside the country. Is everybody getting that? So now, if we talk about trade surplus, remember, what does the word surplus mean? Surplus means you have enough than you can consume. So what remains is the surplus. Now, what happens with surplus goods? Surplus goods are always done what? Exported. They are always taken outside of the country to benefit other countries that do not produce that particular good. So now, what's a trade surplus? A trade surplus occurs when a country exports more goods and services than it imports. So a country like China that is exporting a lot of goods, they're exporting cars, they're exporting agricultural produces, they're exporting tech, they're exporting services, they're exporting a lot of things. Why? Why? Simply because they are having a lot of surplus of these services, of everything. So that's why they do what? That's why they export these goods. And now when they export these goods, what happens? They create something that is called a trade surplus. Why? Because they're exporting more goods and less imports are coming into their country. They cause a trade surplus. An example is if a country exports 100 million US dollars worth of goods and imports only 80 worth of goods. So you can see that there's still a $20 million trade surplus. That these guys are only benefiting from doing what? From exporting their surplus goods. But the other countries that they are exporting in goods, they're not allowing them, they're not giving them that fair value of them doing what? Of them importing in their goods. So it's like China is exporting their goods into what? Into the United States, but they aren't allowing or they aren't offering enough business to the United States to allow them to do what? To import their products to what? To China. I hope everybody's understanding that. So now this is it and this is it. That is how business is done. So now that is about tariffs. That's about tariffs. Major things you have to know is a tariff is just a duty that is imposed by the government and the customs territory on imports of goods. There's a trade deficit, there's a trade surplus. There's imports, there's exports, period. That is it for tariffs. So ladies and gentlemen, back to business. We've been talking about this a lot. Been talking about time. We've been talking about sessions and all these things. And still, these things are going to make sense until you practice them, until you put in the time, or else you're not going to figure this out. You need to know that you have to show up every day, put in the time. That's when you're going to start seeing these things. Failure to do that, you're not going to see anything. you won't see anything. You won't see anything. So now, this point, I told you guys yesterday to do for me an assignment on time to label those time cycles and send them. You never did that. So, but today I just want to tell you guys that you guys literally need to put in time. You need to put in time into this. You may think it's just easy. You come up here like 2 days, 1 week, and you start seeing things. No, this is a skill, and any other skill, just like trading, they will take time. Like any other skill, just like playing a musical instrument, they will take time. They will take time, surely. They will take time. They will take time. So you just have to prepare yourself. For those that have come late, we've already covered tariffs. You just watch the video from the beginning on YouTube. So you just have to understand that you have to work hard. You have to put in the time extremely 100% of your energy has to be placed into this. So today, literally, we've been talking about a lot of things. We've been talking about sessions, we've talked about time, we've talked about price, we've talked about fair value gaps, order books, market structure shifts, we talked about manipulation, accumulation, distribution. We've talked about all these things, but they aren't going to make sense to you if you do not go and practice these things. If you do not show up every day for your own sake, they aren't going to make sense to you. It's just going to be another skill that you've been part of learning, but you're not literally going to learn it. Why? Because you haven't decided to put in the time. But just try it. Just try it. Just try to sacrifice. Just try to put in the time. And let's see what happens. Fine. So this is NASDAQ here. Alright, so let's do some breakdown. Though today price doesn't look pretty nice, it's just too choppy. Doesn't give vibe completely. So alright, so what do? We label 18. Price doesn't give vibe, man, the whole day. So let's label Asia, man. So the whole day has just been accumulating, man. It's pretty weird. Price is just ranging. Anyways, that's one of the characteristics of prices on weekends. So you can see the only reason I'm putting these lines is to guide you. It's just to guide you to see the time down. I'm not going to mention the time, just know those specific times are when these sessions start. Asia is the first, London in the middle, New York AM the next, up to 11:30, New York PM up to 6, from 11:30 up to 16, which is 4. So that is it. So we can all see how price has been weirdly moving, like it's been weird. It's been weird. So yeah, you have to always understand that sometimes price is going to do this. It's just going to be ranging like weirdly. So today hasn't been a trading day. We've not traded yet. Like we've just been looking at the charts, but yeah, not a lot of trading. But then if we can look at some points of interest, is that if you come on the 5 minute here, you figure out that we have a fair value gap here, and you'll figure out that we have this fair value gap, that blue line, where that blue line is starting from, to this low here. That's our fair value gap. So the gap in between those two blue lines is our fair value gap, right? So this is where it's starting from. So we can see there that low and the high of this candle. So that gap in between, that inefficiency, that candle there, the body of that candle, this portion here hasn't been what? Balanced by any candle. So what does price do? Price goes up, then what does it do? It comes back, fills it in, the body is closed back in the fair value gap, then price does what? Price starts playing inside that fair value gap. So they got support from this fair value gap. You remember yesterday I told you that we are looking to see price giving us or offering us support here. So we can all see that price has got support here, and what is literally playing out in our heads is that we are looking for this fair value gap to offer enough support to push price where? Further to do what? To take out this liquidity here, form new highs. Yeah, so that's what we are looking at. So basically today is a Friday, and we all know that what happens on a Friday is just price is looking for a closing range, simply because the week is ending, and we shall be expecting price to react next week Monday, simply because if price ranges like this on a Friday, you just have to expect Monday to have some nice momentum, except if Monday is going to have a public holiday, a bank holiday, and maybe less volatile news. But then on the look of things, yeah, we are seeing price gaining support from that 5-minute fair value gap, and there's literally nothing. I'm seeing nothing except for a ranging market that I don't want anyone to mess in. So you just have to understand that sometimes it's going to be like this. It is going to be like this, and how do you know that things may turn out to be bad? If you come to Asia, Asia doesn't take out previous sessions low or high, because yesterday the high of New York is here. This was the high of New York yesterday. That line there, that's New York high. That's New York, NH New York high. Then New York low is this ends down here. This is New York low here. Actually, this one, New York low is there. So now if you figure out that, like, that means Asia has been doing what? Accumulating. Then still London starts here. Let me just try to label these sessions for you. This is Asia session. Then this is London session. And this is New York session, AM. This is AM. This is basically AM session of New York. NY. NY is standing in for New York. So then the last one is going to be PM, NY. PM session, NY. Yup. So that is it. So now if you look at Asia, Asia failed to take out what? Asia literally failed to take out New York high and New York low, which makes today's Asia an accumulation. Same thing happened with London. When London opened, it failed to take out Asia high here. This is Asia high. They failed to take out Asia high and Asia low. This is Asia low here, down. Okay, now you're starting to see a lot of lines for those that have come late. The two big ones are referring to a fair value gap from 5 minutes. This one is Asia low. That's Asia low. Okay, let me just try to change the color of these to this color. I like this color. Chocolate brown color. Alright, so this is Asia high. That is Asia high. So London failed to take out Asia high and Asia low. Same thing with New York AM. Okay, New York AM tried to take out. New York AM took out London low. Yeah, they took out London low, but still, price action is just not good enough. Price is still ranging. Price is still ranging, so it just doesn't make sense for you to like trade. Like, man, just put your hands up, wait for Monday, wait for Tuesday next week, wait for Wednesday, wait for Thursday, and let's see how price shall deliver. But today, man, it's just a kill zone. It's just a dead zone, rather, not a kill zone. It's just a dead zone. Why price is just accumulating? It did its job this week to distribute, but it's trying to figure out points where it can close. So you have to understand that. So yeah, this is for Nasdaq. This is for Nasdaq. So now, whenever price is ranging or accumulating like this and consolidating, you literally don't want to trade. Why? You don't want to be stressed. Price going up and coming back to your entry, going up and coming back to your entry. They come back, they take your stop loss, it goes back up. Like, man, price is just ranging. It's not nice. It's not nice. You need some of these big candles. Is everybody seeing these big candles like this? These are candles you need to be participating in. Like, at least you know there's volume, there's momentum. I'm talking about these candles like this, such price action like this, like straight price action, like straight to the point. How many points are there? Let's see. Perhaps if you entered from here and got out from somewhere there, those would be around. Okay, let us say you got out from here. Those would be around 1,338.2 points, 0.2 handles. In futures we call them handles, in forex we call them pips. Yeah, so that's it. So those are very enough. Those are even too much. Just this is enough, man. Like, there's no reason for it being greedy like that. That's very enough. But that's the kind of price action you're waiting for to see. But for as long as we are still in this rugged price action, you don't want to be trading. That's an advice. It will help you. It will help you so much on managing your risk. Not every day is a trading day. You have to understand trading days. You have to understand those characteristics. How do you qualify that today is one of the days I'm going to trade? This and this and this and this has to what? To happen. Failure for this to happen, I'm not literally trading. I'm going to sit on my hands. Instead of spoiling my clean sheet for the week, I should just sit on my hands literally, than spoiling whatever I've built in a week and just spoil it on the weekend. So it's just pointless. I hope everybody has understood this. Yes? Thumbs up if you've understood whatever I'm trying to talk about here. So Ivan, I'm seeing you. Edison, you're there. Tommy, you're there. That's great. I'm seeing Adrian. Adrian, you're there. Ibrahim, you're there. Bernard. Simon, you're there. Kim. Okay, so that is it for today. I don't know which pairs you guys were looking at. Yes, let's interact. Which pairs were you looking at? You could just text them down in the comment section and let's see. But then for Nasdaq, man, it's just looking rugged, very rugged. I doubt. Did any one of you guys trade Nasdaq today? Thumbs up if you traded Nasdaq today. Like, man, it's crazy. Like, if you participated in a trade today and like you managed to secure some profits, then wow. I won't say that you're a legend, but yeah, good luck on things. Okay, there ain't luck here, but it's not. Okay, it's just so weird trading in such conditions. Though there are setups, I can see setups. One of the setups is literally this fair value gap, like when price came back and got support from this fair value gap here. You can see that price there came back, got support, and after getting support from there, what happened? Price, like, literally, yeah, it started buying, it started doing its thing of distributing, and that's in Asia. And that time, man, unless you're not a guy that likes sleeping, but by the time that move was happening, I bet you were asleep, and there was no way we were going to catch that move in Asia. So just today was just a pretty hard day. It's a hard day to trade. There's no clean structure. Everything is just rugged. I'm not even seeing significant points of interest. The only point of interest I'm having right now is this 5-minute fair value gap. Only until next week. I just want to see how price is going to react on it or in it, and we see what happens. Yeah, but it's already the PM session, and I'm expecting some big candles, some big momentum to come in on the other half of the PM session. So let us wait and we see. But then you just have to know that you have to be patient. Ultimately, patient. Like, this is a game of patience. If you can crack patience and psychology, and you have knowledge and you have risk management, man, you've cracked the code. That's what I can tell you. You've cracked the code. But failure for you to control those, then you're going to mess. You're going to mess. You're going to mess. So you have to understand this. One, get knowledge. Get knowledge, as much knowledge you can. But then be aware of your sources of knowledge. Be very aware. Be very aware, be specific, analyze yourself, analyze the trading strategy that is best for you, analyze the concepts that you want to use, analyze all these things. That is going to help you literally. It's going to help you increase your confidence. It's going to help you bring peace in you. It's going to help you not overtrade. It's going to help you not what? Not blow your account. It's very easy to blow your account nowadays. It's very easy. You have all the leverage, 1 to 2,000. What's that, man? That's nonsense, man. How can you have a leverage of 1 to 2,000? 1 to unlimited, man? That's bullshit, man. So you just have to understand your worth, understand where you fall, understand what you want as a person. And now when you understand that, try to implement. Failure for you to put in the times, in the skills, nothing is going to happen. It's just going to be a myth. Another person that came, saw, and they never conquered. You have to understand that glory is always fleeting, but obscurity is forever. You can just decide to live under obscurity, and no one will know you. No one will ever know that you worked so hard No one will ever know that you pulled a lot of effort or put a lot of effort into building something that is worth the legacy. And that's living in total security. Failure can never put you down unless failure can never put you down if you literally know that the desire for success in you is strong enough. Failure shall never put you down. It can't even cross in your mind. The moment, the second you know that, okay, you know what, it's just my determination, it's just my courageousness, my perseverance, my patience that has to be strong enough to win the force of failure. If you do not reach there, if you do not reach that level, then yeah, surely you'll just be another guy trying to mess with the charts, trying to pull up every day, then give up in the middle of the way. Just imagine after putting in 2 years, 1 year, be it 1 year, man, and then you give up, man. What's that? That's man, you've lied to yourself, man. You've lied to yourself, and that's not how things work. That's not how the universe works rather. In this world, you always get what you deserve. You never get what you want. Not the Lamborghini you want, not the Ferrari you want. That never comes. You shall always get that which you deserve. And how do you deserve something? Simply by working hard for it. By working hard for it. And how do they work hard for things? In trading, you literally have to show up every day. You have to show up every day. You have to show up every day. Failure for you, failure for you to show up every day, you won't get what you deserve. You always get what life dictates that you should have, not even want, because you can never get what you want. Everybody wants a nice life, but do they have it? No. Why? Because they don't deserve it. Literally, if you deserved a nice life, you would have it, but simply because you just want a nice life and you can't work to deserve it, then you shan't get it. It's just a dream. It's just another myth, a fairy tale. So you need to put in the work. You need to put in the energy. You need to put in the push. Discipline is what remains when there is a motivation. You have to understand that the ability for you to put in 8 hours a day into chart work, into analyzing these charts, into making research, into analyzing news, into analyzing fundamentals, into researching on tariffs. I'm just teaching about tariffs here. And why did I say tariffs were? What did I say tariffs were? I say tariffs are literally what? Duties that are imposed by what? By a national government or a customs territory on what? On a nation's imports. Now, failure for you to put in time to purchase this knowledge, to acquire this knowledge, failure for you to know these things, you will literally never get what you deserve. You will always get what life shall dictate you will have. That's a life hack. Failure for you to pay for reliable knowledge, to get people or circles that have reliable knowledge, you'll always get what life dictates for you. So you just have to put in the time. Put in the time. There's always two things: the objective truth. There's always two things. There's always two things. There's something called the objective truth and the subjective fact. So there's always a real reason to doing something, and there's always the good reason. Those are two different things, and you have to know the difference. That's another life hack. Be it in trading. There's a reason why we are not trading today. There's a reason why we're not trading today. And the reason is the market is choppy. Like, this is not price action we are going to trade in. Like, you have to learn when and where are you going to sit on your hands. Not every day is a trading day. Failure for you to understand that you ain't gonna make it outside here. It's a jungle. If you do not hunt, you shall be hunted. And that's the game. It's risky. We have some poaching going on. They are hunting you, man. You're the animal. You don't know about tariffs. You don't know about time. You don't want to put in the time. You don't want to show up every day. You think it's just going to happen in a snap. You just think trading is going to solve all the problems for you simply because you know what a fair value gap is. Man, there's a lot more to learn. You need to humble yourself to understand that anything worth having in terms of success, you need to sacrifice. It's just like love, man. You need to sacrifice. There are always sacrifices that have gone into success. There is no success story that you will ever hear that doesn't have a dose of sacrifice. Tap Kobe Bryant. What did he do? He sacrificed himself. Even when he was injured, he still went and played those matches simply because he made a statement that he always had to show up for that fan that paid to watch him play. If he doesn't show up, the fan shall miss out on the hard-earned money that they've saved to come and watch him. So that motivated him to always show up. But then for you, if you're always going to wait for me, for anyone, for motivational speakers to always come and give you a burst of motivation speeches so that you can do the right thing, then you're possibly lying yourself. This ain't your game. This That's not how life is. You must have discipline. Discipline is what remains when these talks are done, when everything is done. This is discipline. Discipline is knowing when to trade and not when to trade. In such conditions, you put your hands up. This is what we call discipline. Discipline is showing up every day for lectures. Discipline is knowing the difference between understanding and knowing something. There's a whole theory on that. Understanding and knowing something. You can know what a fair value gap is, but you don't understand it. Those are two different things. We'll be here talking about knowledge, wisdom, and understanding, clarity, composure, all these things. But if you do not understand, if you do not know, if you do not have that wisdom, if you do not have that clarity, if you do not have that composure, then man, it's a lie. And if you do not know the difference of each, then man, you've even messed things already. There's a difference between knowing something and understanding something. You find you know what a fair value gap is, but do you understand the theory behind it? Do you understand fair valuation? Do you understand macroeconomics? Do you understand auction price theory? Like, you just know that, okay, a space in between two gaps, a space in between two candles is a fair value gap. Do you know why it's caused like that? You don't understand, you just know. Thumbs up if you're trying to get what I'm trying to talk about here. Thumbs up if you're trying to get what I'm trying to talk about here. That's it. You have to understand. That is how success is got. Not by knowing, okay, you know what, I know this. Fine, you know it, but do you understand it? No, we are not here to play. Do you think Muhammad Ali just knows how to box? No, he knows and he understands all the schematics in boxing. He knows the angles, he knows and he understands how to do things the right way and why to do them and where to do them and when to do them. But then you just know, okay, this is the fair value gap. You do not understand why that fair value gap has been printed, why it is there, at what time is it there, why did it print at that specific time, which fair value gap should I literally use. You do not understand all of that, but then still you feel like you're going to be successful. You feel like you need the Lamborghini. No, you don't deserve it, man. You just want it. You haven't put yourself in that position that you deserve it yet, simply because you're just trying to know stuff, man. Until you understand stuff, until you understand life, until you understand yourself, until you understand your emotions, until you understand your psychology, until you understand the skill of trading, that's when we can start talking. That's when we can start talking about all of that. But before that, it's just a bet. It's just gambling over your dreams, over things that you want, not things that you deserve. And who told you that the whole thing to trading is just buying Lamborghinis? No, man. Like, you don't even have a piece of purpose in your life. You can't tell me you've wasted 5 years, 7 years practicing, showing up every day just to buy a Lamborghini. Man, that level of purpose isn't enough to keep you going. It isn't enough. If that's all, man, it's better you just quit, go try something else, try dealing with drugs, try doing something else, man. You can't be here simply because you want to buy a Porsche car, man. Then what? Guess what happens next? Hmm? So you've bought that Lamborghini, what happens? You buy another one, and you buy another one, and you buy another one, and you buy another one. Then what? You don't even have a piece of purpose in your life. That means you don't even understand yourself. Bro, you're still a loser, man. You're still a loser. Now you have to understand all of this. Not just knowing that, okay, you know what, I just have to come, wait for this fair value gap, I need to wait for a structure shift here, then this and this. You don't even know why the structure shift is happening. You're just there. You don't know what a tariff is. You don't know fundamental analysis. You don't know sentiment. Bro, you're not understanding shit. But then at the end of the day, you want a Lamborghini, man. Like, you see, this world it's so weird. It's so weird. And it has to be weird. If you ever want to understand what's going on, you literally see that the world is weird. The world is weird. Now tell me, if at all your purpose was just to buy that Lamborghini, then what next? Yes, fine, you've bought it. Then what next? That means that you don't even know yourself. You don't know your purpose. You don't know what you want. You don't know what you deserve, man. You're just simply living. Fine, I'm not saying that it's a bad place to stay. Like, when you have the money, you have the cars, you have. But then it's going to get boring. It's going to get boring. And the chats are also going to get boring. Why? Now you have it all. You might even not have the motivation to ever come back to the chats, be trading like once in a year, maybe twice, maybe thrice, who knows, who knows, who knows. But then you will have forgotten that you sacrificed 5 years showing up every day simply because you just want to buy a Lambo. Like, man, that's 200,000 US dollars, man. Like, it's just weird. It's just weird. So you have to have enough purpose inside you as a person to know. You have to know. Pray to God. Pray to God to guide you, to give you purpose, to show you the way, man. Like, you're going to get money. What are you going to do? Like, spill it on women? No, come on. There are a billion things to do. There are hospitals that need to be built. There's a lot of things that need to be done. Like, you just have to get out of this rat race. You see, the rat race doesn't only end in the 9 to 5s. No, it also comes to skills, to passions. There's just that race that people put themselves into. Okay, I'm a trader, I need to make this amount of money, 100,000, maybe $1 million, then buy a Lamborghini, then do this, then do this, then do... Simply because that's the norm, that's the norm, that's the norm. Everybody that knows about a forex trader, yo, they have cars, they have this, they have this. No man, come on, come on. Get serious with your life, man. Get serious with your life. Failure to do that, someone will do it for you. Someone will surely do it for you. I always tell people that there isn't anything in life that doesn't get balanced. It's just like a fair value gap. Once they leave it, it shall be balanced. Sometime in future, price shall come back to it and balance it. It's just the same thing with life. Sometime in future, something shall happen to balance that fair value gap. Something is expected to happen. Yes, Adrian, you're saying everything becomes boring even if it was some other field. Yes, it becomes boring, just now. Then what next? That's when purpose comes in. That means you have not planned because it is going to happen if you put in the time very well. The reason I'm talking about it, it's because I literally know that if your desire to succeed is strong enough, failure can't trespass. It can't. You can't even think about it, man. You can't think about it. That is why you have to know that it's going to get boring. It is surely going to get boring. I've told you. You have to expect that. You have to surely expect that. It shall get boring. Simply because you never understood the difference between understanding and knowing something. And then you'll have to suffer at the hands of what? Life, at the hands of mercy. It's just the same thing here on BTC USD. Like, whatever is happening, it's just not nice. Like, still price action is not nice here. Let me try to plot these levels. But you just have to understand that you can't just be living as a savage, as a person that doesn't understand themselves. You don't have goals, you don't have vision, you don't have purpose, man. You just, I don't know. You just have to style up with yourself. So BTC USD. Come on, it's not looking nice too. Just know today, just put your hands up. Bernard, are you still there? Bernard, are you there? Bernard. Alright, so you just have to put your hands up. Just don't trade. It's not looking nice completely. So we can see same thing with BTC. BTC is having a fair value gap here. You can all see that gap. So price is getting support from there. They tried violating it, but it provided support. Yep. So just don't temper with BTC. Don't temper. Oh man, just rest. It's been a whole week of price action. Like one day of putting your hands down doesn't cause any harm. Like not every day is a trading day. You have to know the difference. You have to know the difference between days like this where you have these candles and days like this when you have such price action. So when you understand that, that's a life hack to trading. It shall help you. First tap these weird candles that were happening on BTC. Man, what's this, man? Is everybody seeing that spike? Yes, is everybody seeing that weird spike there, man? It's crazy. Like this spike, man. Like, what was this? Is everybody seeing this, man? It's crazy, man. This whole, man, it's crazy. But you just have to know that there's a difference. You always have to understand when price shall always deliver. There are specific days, there are specific time intervals, there are specific price levels that price shall always do what? React with momentum. Now, when you understand that, that's a life hack. You're going to get saved from unnecessary trading days. If at all I wasn't here to guide you, most of you guys would have been trading today. I know most of you guys have traded today and maybe perhaps you've made losses. But you just have to understand that whether you've made a loss or not, that's a learning stage. We always learn from our mistakes. I'm not here to condemn anyone. Just pick up your mistake, refine it, let's move on. That is the mentality you must have. You mess up, figure out why you messed up, correct that. If you messed up today, just understand that whenever price is undecisive, whenever price is over accumulative, consolidative, please and please sit on your hands. Sit on your hands. Sit on your hands. That literally shows that price is not ready to deliver. However much you see an A plus setup, please and please respect your discipline. It's worthless to enter such trades. You can't sell yourself, man. That's your standard. If you mess up with it, that means you've destroyed our code, man. So this is it. You just have to understand that not every day is going to be a day where you're going to pull off dimes, you're going to pull off money, you're going to pull off this and that. There's always a difference to it. So yeah, you just have to put in the time. Put in the time.